This point. Obviously, again, economists, you'll know about stocks and shares and bonds and Bitcoin. There's experts on Bitcoin. But shares, of course, they're not a safe investment. Even the very best companies aren't necessarily a safe investment. So in terms of investing in stocks and shares, probably not going to happen when you're a student unless you're in that sort of Bitcoin collaboration which is going on. So what sort of advice would you give to somebody maybe in their early 20s, something like that, looking at shares?
Yeah, the higher risk stuff. I mean, you can take a stocks and shares ISA. You can go into investment funds that manage it for you. So I think if either these sort of companies that have investment funds that you can pay money into over time, if you want to get involved in the higher risk stuff there, but maybe you don't want to manage the portfolio yourself, there's an opportunity there to do that.
Which is the way a lot of pensions are managed, isn't it?
Yeah, exactly. And I think for a lot of the students who will be more economically savvy and understand the FTSE, you'll understand the fact that it's not a guarantee. However, people tend to do well when the market's up. Yeah, if you're in a bull market and you get in at the bottom.
Bull market, what's a bull market, Karl?
It's when the market's on the up.
Yeah.
Bears when it's on the down. And if you invest at the start of a bull, then you're going to come out very well from it. If you go in at a bear, you're not going to make any money at all. You're probably going to lose money in the long term. During the financial crisis, it was very interesting on equities because your blue chippers always do well. Your companies like GlaxoSmithKline.
What do you mean by your blue chippers?
The best rated stocks, so the ones that are always going to pay the best dividends and are the most stable companies over time. Your blue chippers. But then you've got stocks that can be on the rise. You can have a pharmaceutical company that has a very good drug and is going to make a lot of money in the long term. Say for example, if you had a pharma company that is going to cure cancer, and you invested in that company right in its infancy, you were going to be a millionaire probably the minute that they float on the open market.
Indeed, there was one on the Team Valley, and it was in the Journal just at the weekend, and it's just got approval for a drug in the United States.
All right.
So that's maybe I
can't
remember the name of it. No, I didn't, but I can't remember the name of it.
Well, so
that's the sort of thing you want to look out for, though, isn't it?
Yeah. So they'll be parking Ferraris outside of those offices.
Yeah,
pretty shortly. Yeah.
Yeah.
But essentially, there's all sorts of risk that you take when you buy a stock or a share of a company. We mentioned the blue chippers before.